right, welcome to Bitcoin Amsterdam. We're here sitting again, Steph and I, and we have a new guest that hasn't been on our show before, Sam Wouters. Welcome.
Thank you.
Good to have you. Well, I've written some things about you, but I don't know, perhaps I'm forgetting something. You're a research analyst at River, and you also are a Bitcoin speaker and trainer, and you talked yesterday about a report, I think. Can you tell me more about what you're doing at River?
Yeah, I produce content and research.
Yeah.
So we have a really big database of articles where people can learn about the basics of Bitcoin, about mining, about Lightning, about technology in general.
So educational.
Yeah, educational content, and I help to maintain that and add new things to it. And alongside that, a lot of my focus has become on producing research that sort of gives people who want to understand a little bit more about what's happening sort of in the long term, like what are the long-term trends of Bitcoin, and beyond all of the price talk and where the price might be next week or in a year, like is there actually data that supports that Bitcoin has a future as a secure network from a mining perspective?
So also measuring network effect, for example.
And just quantifying that a little bit more, so people actually have numbers to look at, and it's not like Bitcoin is super secure, but what does that mean practically?
And
Are
you focusing on a specific subject, or
whatever, like basically there needs to be an overlap between what does the business care about, because we use some of the insights internally as well. What do our clients care about? What do they want to know in the long run? And what's actually interesting for the industry as well.
Because what is the core business of River?
It's a Bitcoin brokerage, so that's the main part of it. So the facilitating the buying and selling of Bitcoin. We have custody for clients, but it's not something that we earn money on. Like if they want to custody with us, that's possible. And then there's like an inheritance product in case something happens to them. And we're increasingly serving businesses as well. And then in addition, like sort of related to this report that I've now done on Lightning, we have River Lightning, which is focused on making it really easy for companies to get access to the Lightning Network without having to set up the infrastructure themselves, without having to worry about channels, liquidity, and maintaining all of that stuff. They just want to try it out and see, like, is this for us?
Well, it's great that you're also not making the research only for River, but also releasing it so others can make use of it.
So it's making the most of it, really, because ultimately, like this Lightning research that we want to talk about a bit today, it's very much for the industry. It's to basically give people a tool to fight back against misinformation.
Because there's a lot of misinformation. Hey, I've read that in total you gathered, I think, 52% of public data for this report, but I think it's more than 50%, so it's really accurate at the moment about the state of the Lightning Network.
Yeah, I feel pretty confident about that. But before I found some additional data, I was still at like the 29% mark or so. And then you're a bit like, is this enough to extrapolate to the rest of the network?
Indeed.
But once you get to 52, then it's a pretty good spot.
All right, let's start with the first question. In a tweet about the report, you also wrote, "Nobody is using Lightning, should be a dead meme." So that's a great starter to
we love that.
And also there's a false impression, like you said before, about Lightning's adoption due to stagnation in node count. We also saw that, of course, channel count and capacity metrics. Could you elaborate on why these metrics may not provide a comprehensive picture of the Lightning's adoption at the moment?
Yeah, sure. Basically, anyone at any point could spin up 1,000 nodes with some data center or whatever and make it look like the number of nodes in the network is growing. Like, you could systematically set up 10 per day, for example, and then over the course of a month, you're adding hundreds just by yourself. So that doesn't really mean anything. In terms of channels, you can open hundreds of channels if you want with like lots of different participants. But if there's no activity in those channels, then how does that say anything about Lightning's adoption? It's, again, like not useful. And if you look at capacity, like Coinbase could integrate Lightning, which they're planning to do, and then maybe they'll throw 10,000 Bitcoin in capacity in there. So the total capacity on the network would triple. But if, again, the capacity is not moving around, it's not doing anything, it's not providing any value to anyone, then what does that actually accomplish? So it's not that they're not important metrics, but they're sort of vanity metrics. It's like, how many followers does someone have on social media? It says something about how well known they might be. But in many cases, lots of those followers will also just be bots or inactive users. So it's like, it gives an indication, but it's not proof of what is happening. And you don't always see the activity that's underneath. And with social media, it's easy because you can just scroll through someone's profile, and if you see they have 500,000 followers,
But there's no interaction on the post or something.
then you know like something's not right here.
Yeah.
But with Lightning, you can't really do that. You can only look at the capacity and the channels and the node count, and that's what critics do. They look at those easily accessible numbers and basically say like, they've kind of been flat over the last year, so surely that means there's no activity. But if you think about it, like the price is down 45%-ish in 2 years, and interest in Bitcoin in general as well. So, like, where would that new capacity and the new nodes and the new channels come from? It has to be from existing users.
Yeah.
And if those aren't, like, if they didn't already get into Lightning over the past years, then, like, there's not going to be huge amounts of them flowing in right now when the fees are relatively low.
Yeah.
I remember talk with Graham Krycek from Voltage also saying, well, we can't look into those transactions, so we can't say anything about the amounts or so that's really a problem.
Yeah.
To measure.
But somehow you managed to look into the transactions because according to your research, Lightning transactions have surged to an astounding 6.6 million in August this year, representing a more than 1,200 increase from August last year, of August 2021. This is also the title of your research, right? What factors do you believe are primarily responsible for this exponential growth?
It's pretty hard to tell, like, and I also mentioned this in the report, there were some use cases that I could account for where you can clearly see the data, but that's the minority of the overall growth. So a lot of people, like, they quickly jump to, like, oh, it's got to be Nostr because Nostr emerged earlier this year, and it's like, from what I could tell, it's like 120,000-ish transactions per month over the past year. So it's a good amount, but like in the 6.6 million that we're at now, or like 6 million in growth, basically that's not a huge amount.
No.
That doesn't mean it's not meaningful, and it could be that it's more than we realize, but either way, like that's just a small percentage, and then there's a good percentage in gaming too, just in streaming content, etc. The whole value for value thing that's been coming up. There's activity there, but I think like a lot of it is really hard to actually distinguish, like what is the use case behind this. What you do see in the distribution of the size of payments, that a lot of the payments are just like up to 1,000 sats or so. That's like 50% of the network or something like that, or 50%.
So these are micro payments.
So they are micro payments. So it is very much for all kinds of applications and tools that rely on just sending a little bit of value at a time.
So there are not many places on earth that you could buy a cup of coffee for 1,000 sats, for instance. So.
And I think like this is one of my favorite things the report highlighted basically is that like since like 2017 or so, those micropayments basically got priced out of the blockchain. It's just not like, and they're probably never going to come back on there.
No.
So where do they go? Like in some cases they'll go to other chains and things, but they don't really do things the way Lightning does it. They don't give that same kind of advantage of the instant settlement of just like one Satoshi payments. So you see like actually there is a clear need for Lightning to exist, and that need is like it's actually there, and it's showing in the data that this is where those low value payments are moving. So a lot of the growth has been in low value payments. I think like that's the main factor that can be identified, but beyond that there's just a lot of unknowns.
Well, you're naming some use cases, so gaming, social media tipping in Nostr and streaming, for example. They have been identified as driving transaction growth on the Lightning Network. Could you share some insights perhaps into how these use cases have evolved and what potential they have in the future? Or is it just speculating? Because
I think it's mostly speculating in the sense that like, they have grown over the past while, but they're also like, I identify them in the report because they are the only ones that I can identify. So the vast majority I cannot identify. So I just call it like, what do I know for sure?
But did you identify perhaps some use cases that you think, well, these are going to stay and are going to grow?
Like for example, if I like Thunder Games was one of the data providers for the report, and like if I look at their like sort of individual stats, it's like they've been growing. They are attracting a lot of people who don't even know anything about Bitcoin, who've never been into that.
That's interesting.
And you're just seeing that grow over time. Like to me, that's a really promising phenomenon, and hope to see that continue for sure. And I think there's a lot of potential there because they're clearly like they found a way to tap into audiences that previously weren't familiar with it. Or
well, they just released a new project, Cringe. We still talked to Desiree and Jack Everett yesterday, and it's very promising. They're entering the gambling market. I mean, it's one of the biggest markets out there. So
and I think a lot of projects nowadays are tend to exist in a normal fiat world, and that way making people getting to know Lightning.
Yeah,
also.
and I think that's the future of it as well. I point this out in the report as well. There's like a section on like one of the ways to accelerate growth of the Lightning Network isn't like in the early phase you always get the companies that they're sort of Lightning native. The people who are at the front lines and they want to set up some kind of new business and they build on a Lightning. But then they have a double challenge. They don't only need to figure out the Lightning side of things, they also need to build up a business that is self-sustaining, and it's super hard. So if companies that already exist start integrating Lightning, then that can significantly accelerate the growth because they're already profitable or successful.
Yeah. So let's elaborate a bit about the utility, because how do you foresee the utility of Lightning evolving in the next few years, specifically how it might affect Bitcoin's broader utility as a medium of exchange? Can you elaborate on that a bit?
I think it's been clear that, like, sort of like in the data that I'm seeing as well, that Lightning is like helping Bitcoin become more of a medium of exchange. I think it'll still take time. Like if you look for the next few years, it's not going to go that fast. People move at different speeds, different communities move at different speeds, and that's kind of how I expect it'll happen. Where in some places people just get sort of way ahead and start using it more and more, and maybe in other places like not too much. People don't really care about it, so it's going to evolve at different speeds, and sort of people look at the success cases there. They start learning from the best practices, apply those in different places. And that's like in a way, it's like a multi-decade process to really get through there. But some people, they'll sort of already live in the future, so to speak, and already be at that level and just fully rely on Lightning.
It's funny because last year, IBEX is providing the payment services over here. And last year, the traditional payment service here, so like the PIN payments and most of the credit card payments, there was an outage. So then they saw a big spike in using Bitcoin. So maybe things have to break to force people into
having
using
an
Bitcoin.
alternative is way.
So Bitcoin can work when other services don't. So
I think it's one of the strengths of Bitcoin. I've often said it's like there's a lot of people who believe in hyper-Bitcoinization as a future. Personally, I don't know. I'm open to it. At the same time, I think like as long as it exists and it continues to be an alternative and a counterforce, that already helps the existing financial system to be more sort of responsible in a way, and maybe change some of their practices. So that, I feel like that's like the minimum Bitcoin can do, and hopefully we can do way more than that.
And to add some critics, by the way, last night we had a meetup here at Brai. And then the internet service provider had an outage, so we couldn't get any Bitcoin transactions either. So I mean, and we can. Ben Ark just had a workshop over here with a offline point of sale. So
setting it up yourself.
We can still.
It's getting easier.
We have still some options, but.
Your report estimates between 279k to 1.160 million monthly active Lightning users as of September 2023. Can you elaborate on the difference between non-custodial to custodial Lightning users and its applications in the ecosystem?
So the range there, like it's a pretty big range.
It is.
And there's like, I didn't really find a way to narrow it down further to really figure out like what's the exact number there. I mean, it's quite easy to figure out if Lightning wallets would disclose like what is our what is our retention rate, but it's not always in their best interest to do that and like kind of come out and compare that to their competitors. But it would be easy to figure out if any of them are like, all right, we've seen this, let's just speak up and solve it. So if you're listening, but
get those information out.
But to your question, like in practice, you see that like really logical. Human beings are lazy, so and it's not a bad thing. Like
it's in their nature.
Yeah, it's just in our nature to like, let's go to custodial route. I'm only holding like $50 or whatever worth of Bitcoin in my custodial wallet. So even if I get robbed, I don't care. That's how it is for a lot of people. But as you look towards the future and like if in the future on-chain fees rise so significantly that there are lots of people that rely on a scalability solution, like maybe it's Lightning, maybe it's something else, then those kinds of challenges become more serious. So what's funny is that Bitcoiners are their own worst critics in a way, and are already very much looking at this problem that we know might emerge in the future. Like it's quite likely if Bitcoin is successful that this, if it's successful, it will certainly emerge. So we're already thinking about how should we solve it, but then people are so vocal about it, like sort of overly vocal because we feel like we have to take this seriously now, because in the future people might not really care enough to solve this and just all go with the custodial route, and then we have a problem.
Yeah.
So the custodial part, to like elaborate for people who don't know, it's like custodial, and custodial Lightning wallet means you don't actually own the funds. It's with a centralized party on the network. Users have access to your balance. Non-custodial means you actually own your Bitcoin on there. It's kind of like holding it on an exchange versus holding it yourself in cold storage. And then the Lightning equivalent.
And one intriguing insight, as I must say, is that the Lightning activity has become more global with more equal distributed activity 24/7. What regions or what countries are showing the most promise on growth, and how might this impact the global adoption as a whole?
Yeah, I wish I had better data on a country-to-country basis. I got some great input there again from Thunder Games on like where are they seeing most of the activity, and the US is obviously a big one just because of the size of the Bitcoin market there. Beyond that, you see like all of the Bitcoin communities that are out there, obviously hotspots of more activity. So it's not always country-based. Sometimes it's like project or initiative or like celebrity-based who gathers a lot of followers who then get interested in it. One country I did call out that I found interesting was Turkey, because in Turkey, general Bitcoin interest is among the highest in the world.
Yeah, but because of the high inflation.
But then Lightning interest was like relative, at least based on Thunder Games data, was like way lower than where you would expect them to be.
Cool.
So because for them, like the store of value use case is so high because of the troubles with the lira. So I can totally understand that, and it's been growing so rapidly for them over the past few years. It wasn't really the case before that. So they'll probably catch up, is my expectation.
So it shows that the medium of exchange is not used there. It's more store value. It's the most important
I would say
aspect.
that's most important. Like I only had the one data source there of Thunder Games, because it's like on Lightning itself, you can't really tell like where is an actual user based.
Right.
It could be that some of those wallets again can disclose some of that data on like where do we see the activity from around the world. I think it would be super interesting, but at the same time they don't want users to feel like, hey, you're spying on me.
And how is this with Argentina? Because Argentina also has to face high inflation. Did you saw some similarities to Turkey, or?
No, not specifically. For them, it was sort of around where you'd expected. But if you look at, I think, South America in general, a lot of them are also very dependent on stable coins, or dependent on, like, they prefer stable coins in a lot of cases. So a lot of people then look at, like, can we eventually get stable coins on Lightning as well? And just have that instant settlement, far cheaper than on other chains to just troll and whatnot.
And your report also mentions that Lightning nodes are becoming more efficient with their capacity. Can you shed some light on what this professionalization looks like and how it's impacting the ecosystem?
I think the awareness is starting to come up that it's something that's good to be cognizant of, that you don't necessarily need as much capacity as possible.
No, indeed.
You want capacity that's actually contributing. It's like, I like to call this like capacity efficiency, like how much of your capacity is actually contributing to the fees that you're earning. And there's not a lot of point in having a lot of capacity sitting there if it's not doing anything. I think one of the things that we sort of tried to push with River, like we announced that we were going to lower our capacity again, because the first time we didn't announce it and people freaked out as the overall network capacity dropped a good bit. So we learned from that, announce it every time now. But we've been reducing it to try to also, like, other companies have started thinking about it too, I feel. Can we maybe have a bit less capacity here and still achieve the same payment success rate, still route the same kind of volumes? So those, for us, they weren't really affected. In fact, they've gone up since, not as a result of, but just because there's been more activity on the network. And I think I lost track of your original question.
Yeah, it was more how the Lightning nodes are becoming more professional. So more redundant, more bigger nodes from bigger companies, and not only the smaller ones.
I think in general, a lot of companies and individual node runners are just trying to figure out, like, what are the best practices, what are actually things that you should be looking at, and over time those things will become sort of better known. Like, what are the things you should be aware of? Like, what what does a healthy channel look like? Like how much activity should there be in there? How often should liquidity be pushed to one side or the other entirely, or should that never happen?
You see it also in Node liquidity management, because there are a lot of solutions now to coming from all the Lightning companies that makes it easier and better to manage it. So that also says something.
Yeah, I think
now we have to measure it, of course. But
I think everyone's very much trying to figure out like what are the things to be watching there. What are the things that actually matter? There's lots of metrics out there, and I think as time progresses, this becomes more and more known. And then people start writing software to automate these things and just share it in great guides and whatnot. So it's definitely a trend that people are becoming very aware of.
Well, Sam, thanks very much for your time, man. And thanks again for doing all this hard work, I would say. We
keep it going.
We love. Keep it going, please. Because
I need a break.
Well, of course.
You may on vacation, man. You may join me to. I'm going to Spain next week. Join me and we'll have some sangria.
All right, we'll do.
But I can imagine it's a great report. People need to check it out. Where can I find it? Because I saw your tweet, of course. I think that's the best way, right?
Yeah, that's an easy way. If you follow me on Twitter at @SDWouters, WOUTERS. You can also go to river.com. On our blog there. That's where the report is listed as well. And you can probably find it if you Google as well. So
very interesting.
We will follow your work.
Yeah.
And thanks again.
Yeah. Thanks for inviting me.
Sure. And maybe we can invite you in the future official podcast. Then we will keep in contact with you.
Then we go more in depth.
Yeah.
And perhaps the Lightning Network is totally different then, because time is short and generations pass by, because it's so projects are rising up. Everything. The bear market is the building market.
That market map's been an interesting one. 179 companies, and then you get like hundreds of messages from people. Why aren't we in there?
Yeah.
We were doing the same.
we're also not on there, right? So,
there's so
need
many.
talk.
Thanks again, Sam.
Thanks, Sam.
Let's
Thanks for your time.
Thanks, guys.
Bye bye.